loans and financing. So those of you who are kind of trailing off back there, please come take a seat. We have an amazing session coming up. Please make your way back to the stage. So I'm going to invite our panelists. Can I please have Henry from Mary West, Duke Pham from Wonder Rates, Alan Russell from Wells Fargo, Hung Lei from Bank of America, and Brandy Ho from SEPQ. We went over the home buying process, and now we have our amazing lenders in the hot seat to answer questions that were, these are burning questions that our audience and buyers would like to know. And our specific panels has different specialties. So I would like to go ahead and put the mic on Luke, and then do a quick intro again to remind our audience what is it that you do.
Okay, so my name is Duke Pham. I am one of the top producers in mortgage brokering in the whole United States, and we already closed more than like $2.5 million, and with 1,000 clients happy. And our slogan is like your loan, our solution. We try to find the best solution for you.
Hi, my name is Henry James. I'm with Mary West, and I've been in lending for 25 years. My specialty, however, is, as I was saying, tenancy and common financing, which I've been doing for about 20 years. It's a unique approach to home ownership. But that's part of what I do in particular. And it's very relevant for the California market, particularly North San Francisco area, all the way down to Los Angeles and San Diego. It's really beginning to change a lot of affordability angles, especially along the coast, particularly where condominium conversion is difficult or impossible.
My name is Alan Russell. I'm with Wells Fargo Home Mortgage. I've been doing mortgages for a few decades. And I wanted to say I love hearing people's stories. It's the best part of our job. Trying to make those dreams and stories come true, because when you buy a home, you're building memories and wealth.
Hi everyone, it's Brandy again. I'm with SEPQ. I've been with the company for 17 years. SEPQ specializes in first-time home buyer, as well as returning buyers such as investment, commercials, and be happy to be up here with my peers and provide the information as much as we can. So thank you again.
Hello everyone. I am Hong Lee with Bank of America. I'm with Bank of America for 20 years now, and I've been in lending for the past 40 years. So we are Bank of America, so we're proud to be the home ownership lender. So we help with the community, we help with home loan, we help with Bank of America product, checking, saving, and CD, and anything that you need help with home ownership, and including if you need help with fixing the credit, we work with partners that can help you to improve your credits so you can get ready to buy your own home. And we also have the grant to help you guys, so you will go more details as we go. And we are so happy to be here. Thank you so much for to be part of VNARP today.
Let's give our panelists a round of applause. Especially taking time out on a Saturday to sit here and be here with us. We're very grateful. So to start off, what loan programs are most popular for first-time home buyers today?
Like my introduction earlier, we offer first-time home buyer Bank of America. grant and then for down payment and closing cost credit, we offer up to 17,500 if the property qualifies.
SFQ again specializes in first-time home buyer. We will protect you while you shop, meaning that we will lock your rate for 90 days while you shop. That way you have a peace of mind. Also the fact if rate happen to change between the time you go out and shop until you give us the purchase contract or up to 90 days, we will relock your rate at no cost. Again, SFQ first time home buyer, we do not charge origination, underwriting, or processing fee. And on the back end, we help with first time home buyer credit. We'll help close with the closing costs as well. We have flexible financing from 100% to 97%. 97% is somewhat similar to FHA, except that we don't require upfront fee. And also the fact that, of course, you can remove your PMI when property eligible at 80% or so. For those of you who are not wanting to pay PMI, we do have a split financing, 80-10-10. If you're a jumbo, you can do 10% down with PMI, or we can also carry the 5%, where it's 85 and 50. Okay?
Which loan programs are most popular for first-time home buyers today?
All right, so the program that works is what works for that individual. So we have grants. Yours are 17.5, ours are 15,000 that you have available. But we lend in all 50 states, FHA, VA, conventional. But again, tailor it to each person's need and what's important. If they're short on down, we work with that program. If they have a lot down and they can move assets to get a discount on the rate, we can do that. So it's really tailored to the individual.
Okay, so I'm probably going to sound similar. We have a lot of the same programs in terms of first-time homebuyer. We do 100%. We do bridge loans and doctor's loans as well. So those are all different angles for those groups. But in terms of affordability, what I see the most, again, begins to be the angle of tenancy in common, because it's taking existing multi-unit buildings that may be tenant that aren't going to be able to be converted, and allows them to become real property amidst. So in other words, a 4-unit building can now become 4 independent pieces of real estate, essentially as tenants in common. It's a little bit of a process, but this by itself has really become a major avenue of affordability for many years in San Francisco, and recently in Los Angeles in a very, very big way. And it's just a matter of time before it comes down to Santa Clara Valley, and it's really has applications up and down. So that's kind of our.
As you know, right now, at Wonderred, we have 50% people go with the income check, and another 50%, go with no income check. Even for first-time buyer, you can buy investment property. You don't want to show your pay stub or bank statement, or even you don't want to show your tax return. We do have very special program for first-time home buyer. Don't want to do income check and don't want to short the bank, the money, for down payment, for example. Those very popular nowadays. People have only 1099 or P&L, and even you don't have to prove anything. Yeah, we do have a program called no income, no down. Yeah.
So what are lenders looking for most when they're reviewing a buyer's application?
For the case, with the income check, then normally the bank they look at the income and credit score. But for the program no income check, normally the bank they only look at the down payment. You have at least 20% down. If you down less than that, then normally they do not approve. So for the no income check program, they look at the down payment. Yeah, and sometimes they look at the credit scores as well.
What are we looking for in an application? We just had one unique case whereby a couple had been receiving their only source of income for about the last 20 years was simply a family gift arrangement that was pretty supportive and quite nice, but it was an absolute non-starter from a couple of the places we had to talk to. I mean, just gift income by itself was not going to work, and our underwriter manager looked at this and they said, okay, listen, the source of the income is, but we can see the consistency of it. It's on the bank statements, it's on the tax returns. This is reliable income, and we don't know what can happen the day after the loan closes, but you don't know that with a standard job. So they basically said, okay, this is something that we can consider here as far as the approach goes.
So we need to know, when we review cases, we're looking at each person, what your background is, the consistency, I like what you said, consistency of income and assets. Do you have the ability to repay? There may be a guideline that said that, but I'm asking you, can you pay this money back? Make it so, first talking about what you have to do to get ready. Part of that is, you can take that whole map, but now let's put what you can afford, what you want to do, and what you can do. And it makes the map more manageable. You can focus in certain areas. Same thing with lending. Tell us your story, really understand the background.
For step Q, definitely is affordability and sustainability. When we're helping a member, we're not just helping them in a short run, we're looking for a long run. How can we support them in the long run? Not just buying this home, buying the next home. So affordability means everything. And for those who have blemished credit, let's not worry about it. Let's build so that way you can get there. We partner with credit counseling, who's offer credit counseling at no cost. So we help members in that area, and of course, we work with members throughout the process, so they're not left behind. If they don't qualify now, how can we help them qualify in the next 2 months, 6 months? Kind of guide them through the process. So it's not just come to us when you're ready. It's more like come to us, let us help you throughout the process until you're ready.
We are a community home ownership, so we try to help with zero down payment or at the minimum of 3% down payment, because we have down payment assistance program, and also we can look up to see if any city or county have any down payment funds available to help you for the down payment and closing costs. Credit, as far as credit, we are very flexible because we have a lot of different loan programs, and because we are direct lender. So we also try to work with the client from the first time to prepare. We offer free pre-qualification process and pre-approval to help you to review the payment, how much you need to get prepared, to get ready until you're ready to buy, and it's free of cost. So we can help you, and like I said earlier, if you need help with credit improvement, we work with a partner to try to get you ready so you can be more confident and be ready to, when we review the mortgage payment and expenses for the house, and then, depends on you're working with a realtor and, in the area that's more affordable for you, because we try to help you to get to the home that you can afford.
This is something I wish they taught us in school, but how do we improve our credit scores, right? Financial literacy is so important, and this is something we have to learn on our own in the real world. So just a quick tips. What can a buyer do to improve the credit score?
The easiest way is before you plan to buy the home, you can have someone to pull your credit score to review your credit score first. And normally, I always have a tip for my client, do not open any new debt, or you limited your use of credit card. Let's say the credit card is have a limit 10,000. Then you normally, if you want to maximize your score, you use only 1/3, or maximum is like half of your credit line. Otherwise, it will be significant, reduce your credit score. Yeah.
Yeah, I'll probably be echoing the same thing, but consistency with payments, maintaining balances, not having erratic balances. I think that's a really key point. As he was saying, watching the 50% balance on a credit line, and let's say you go up to 95%, that's not good helping your credit. So you have to be mindful of if you have a $5,000 level, that how you're using that is really important, not just that you have that line.
Real life example, I could pay cash for a car. I thought I was a smart guy, so I financed it. And financing that car, because you get hit for a new inquiry, and you get hit for a new debt, and you get hit for a new balance. So my score went down 40 points for financing $15,000 or whatever it was, right? So what everyone has said here is important. Keeping your balances down below, I'd say 25% of the line of credit. Anything that's open within a year is a deduction on your credit score. So just think of it as a predictive tool to determine who's going to pay. The higher the credit score, the more likely you are going to repay. So pay on time, keep your balances low, don't open new accounts when you're getting ready to be reviewed for credit.
Echo to what my peers say, but also important is to have a mix of credit. Having just a mortgage loan itself, yes, it helps, but you also need credit card, auto loans, and all that good stuff. Also, the important things of basically capacity, like my peer mentioned. Although they gave you a credit line, let's just say 50,000. Be mindful of how much of a balance you're taking out. Also, if you can, make extra and above the minimum payment, because that would be building your score a little bit faster. And of course, if you ever running late or have any issues with payment, call the creditor, work with them. That way, they're trying to minimize or, find ways not to report you to the credit bureau.
Yes. If you're thinking of buying a home, I think at first you need to build your credit. And we're looking at, I think, the minimum of 3 trade lines, like credit cards, retail credit, you buy retail store, credit card, Visa, MasterCard, anything that, when you own a car, you have a car loan and stuff, so you try to get at least 3 credit card, 3 pieces of credit for the minimum of 12 months, so make it easier. And then we offer credit cards as well. So let's say we do a pre-qualification for you and we see that we don't have enough credit cards or enough trade lines, we do offer credit card or secure credit card to help you to build your credit if you're ready. However, we can use the other trade line like rent payments, utility bill payment to help you to qualify for them to cover the credit needs.
I would like to add one more thing, like in case if you already have let's say low credit score, like 640, 680, and then at VNARP we do have a service to help you to rescore, look at your credit score and look at your balance, and then we can help you how to improve it, and we can rescore, and typically take about a week to get your score better. It's another option for you to consider.
So in Silicon Valley, we're very familiar with different types of loans, conventional, FHA, VAs, but specifically for Duke, what exactly is a non-QM loan? And who is it designed for?
The non-QM loan is, they call it non-qualified loan. So typically, it's designed for people, they don't want to do the income check, or they want to do an income check in another way. Like you don't have to give your pay stub, or you don't have to give your tax, but in turn you can use like P&L, or maybe just try one bank statement, 2 month bank statement, or you can use like 1099, or in some case you don't have to show anything, but you need the down payment. Yeah. The key thing is like interest rate is of course higher for the standard one income check. Let's say around like 5.5 or 6%. With the no income check, of course it's gonna be like 6.5 or 7%, usually 1% higher for the QM loan.
had another topic, tenancy in common. So what is tenancy in common and why is it growing in popularity?
Okay, so I'll just kind of quickly break down what tenancy in common is exactly and how it compares, for example, to condominium or cooperatives. So those are the two closest similar types of properties, but you basically have the exclusive occupancy right over a certain unit that's managed through a private agreement. This concept for many years, holding property as tenants in common just meant two unrelated individuals co-own equal or unequal amounts of a property with a written agreement usually in place. In the 1980s, an attorney kind of brushed this concept off, imported condominium CC&Rs, and really formalized how this ownership structure could be. So you're getting something that the owners have a real direct control over the management of the building, unlike where it is with a condominium or a cooperative. It's a really unique ownership style. And the reason why it's growing so rapidly in California is that condominium conversion in virtually all the communities up and down is really difficult, if not impossible. San Francisco has its long history with the lottery that's been gone now for a decade. It can be done, in some communities, but at a great cost, great legal fee. You're just going to spend. Whereas you can just take a 4-unit building, a 5, a 10-unit building, even or 2, and just convert it to tenants in common ownership, and everyone will have real property. That's the one key: is that each of these interests becomes real property through and through. It flows through your estate, just like a house or a condo. It's not some kind of community shared thing that you got to come back to, or like a BMR arrangement. No, this is just simply another form of real property.
So in our communities, we have lots of multi-generations. So what are the risks and rewards of co-owning?
So co-owning here means the one thing we do, first of all, is the financing part is fractional TIC financing. And that's one of the things that West, and I've been doing for 20 years, West offers is independent loans secured to undivided interest so that you're not sharing. If we're all buying a TIC together, I'm not connected, we're not connected. So if you default, no offense, that actually does not impact my loan whatsoever. And that's really key, and that's one of the novel innovations that's come about in the last 20 years. However, taxes and insurance are definitely still shared obligations. Tenants and commons are still one parcel all around, that's the key. This is still one APN under the roof. And so we have one insurance bill. We have to manage it together, find insurance. Taxes are based on your purchase price. So if you buy your unit for $500, you pay taxes on $500, just like a regular property. Your neighbor for $600. You then have to work that out with the accountant and say, okay, because you're only going to get one tax bill. Well, who owes what? And that all has to be managed. So it's a combination of both protected individual ownership along with community property management.
And then I think this is everyone's favorite. We hear this a lot. So is it smarter to wait for rates to drop to buy now? Is it smarter to wait for drops to drop? No. Is it smarter to wait for rates to drop or buy now and refinance later?
I'll just say it's a tough world these days to figure out where rates are going. There's a lot of events going on around the world, and that seems to be the main driver. So you could say buy now, but I'm going to let him handle it here.
Very smart. For me, it's just like we talked earlier about pre-approval. What can I buy and what value do I have today? Because that I can control a little bit. It's what the market is today. If that works for me, buy now. Don't wait. Because, as you said, I can always refinance later. So it's an old axiom. I'm going to sound like an old guy, but you basically, marry the house and date the rate. So
I agree with my peers. You own a piece of property here, basically you own a piece of jewel here. As you've seen, we ride a wave, like many waves have we ride, but housing in Bay Area has remained steady, has remained calm so far. The good thing about SubQ is, let's say right now you pay this market rate, and in the future, if rate happen to drop, you can request for rate modification. Meaning that to basically lower the rate for the remaining term without having to deal with the hassle of refinance. Or, usually when you refinance, you either have two ways: stretch out the term or shorten the term, because there's no such term that would I say fit into that remaining point. So that is an option. Yeah. Okay.
So, I wish I don't know. By now, if you're ready, because if you wait, and I don't know, wait for, until when. There is a client that they have to wait for like 5, 6 years, and then they wish that they regretted that they could have bought like years ago. So it's hard to say when's the best time to buy, but it's always the best time to be home. So get into a home first, refinance, anytime, because we don't have any prepayment penalty. So you can always look into refinance, contact us, and sometimes for the 30-year fixed rate loan program, sometimes we even offer the client rate modification like after a year. And we just offer automatically. So we have some client that they call, and then suddenly we have a tool to check, and then they didn't know that we offer them lower rate with the processing fee. Okay, so just buy when you're ready, and talk to us, and we provide you the pre-qualification for the payment and everything. If you think you can afford to buy now, just buy now. Because I think when I started with Bank of America, everybody thinks the rate now is high, but remember years ago it's like about 12-15%. And now it's sometimes we say what a rate, they should say what you buy. But actually sometimes now it's even low rate already.
Also, appreciation is 3 to 5% per year, and I don't do anything for 5 years. And that home was $1 million. I lost. There's a lot of that was on the table I didn't get.
We're having a current live session on the stage, so if you're in the back, please keep it down. Thank you.
Can I add one more thing? So normally, when the rates drop, it creates more affordability, and then the price, usually might go up. So I totally agree with all the panel. If it's affordable for you right now, then you just buy it. Because timing the market is very, very difficult, and if the rate go down, then normally the whole price will go down.
Lots more competition, right? Okay, so to wrap it up, what is one financial habit every future homeowner should start today? One.
I think the financial habit is for me, I always tell people, first you always need to build your credit score good, because your credit score affect the interest rate a lot, and it will save you a lot of money if you have a high credit score, and you should spend the money on wealth to build wealth instead of buy fancy stuff, and it might depreciate a lot. Home in Bay Area usually it appreciate for at least the last 20-40 years.
I think one thing I would just say is that expect everything to cost or involve a little bit more in the way of resources than you initially planned. So if you're thinking of going in and you this is your target market and this is what you have allocated, just be prepared. You will probably be more. Be prepared for the unexpected. It is always there. We'll just stay vigilant looking at properties. There's always something new and different and exciting every day. It's amazing. You're fine.
And the one thing for me is life is choices. Where are you going to spend your money? I had 10 subscriptions. I had ordered DoorDash 20 times. We started adding it up. It was a lot of money in a 30-day period. So choose where you spend your money, because it will affect your future.
I totally agree with that. Take care of your savings, and your savings will take care of you. And also take good care of your credit, because before the lender get to meet you, get to see you, they see your credit. And also importantly too is that If you wanted to create wealth, of course, get a starter home. Look into investment opportunity, grow your 401k, grow your stock, and things of that nature. But importantly, too, is that when you're ready for the process of buying a home, find an agent that basically match with your need, because we have so many agents out there. Everybody specializes in different things, as well as a lender. Before you go and go out and shop for the house, make sure you know your buying power. Just like you go buy a car, you go to find what your buying power is, so that way you go to the dealership, you're not being hassled by the salesperson. So it's great first to also find a great realtor, because that person basically held your hand through the process. And of course, us lenders too.
So I agree with you, buying power is very important. However, we do offer, very important for Bank of America client, we do offer life plan. So we actually have it built in your Bank of America mobile banking app, a life plan. So you can just fill that out and get yourself prepared. We also offer a real estate center where you can look up property that qualify for the down payment and the America Home Grant. So we have all that too. So come to us and then we can introduce you to all that link, and then you can get yourself prepared. And we want you to own a home as soon as you can.
Thank you. So as you can see, we have very important lenders on the panel because there's so much information. So each lender, each bank has something to provide different services, and it's not one size fits all. So find someone that can help you. We have tons of resources, connect with our lenders, and please give a round of applause for everyone that's on the panel today.